Mark, appreciate your time on this morning of your earnings release. Let's talk, though, first about the weaknesses that you're concerned about in the U.S. What is the problem there?
Well, good morning, Matt. Well, we knew it was a tough quarter from 2018 to beat. We all remember the impulse that we all recorded with the tax reform driving retail sales in the first quarter. So we knew it was the toughest quarter to beat. However, we continue to see a strong shift from physical retail into online. So we see good growth in our online business, but it was an even tougher quarter than we initially expected in our physical retail, and also the feedback from our import wholesale business in the first quarter was rather muted. So it was, I would say, it was a disappointed start for us, despite the fact that we knew it was going to be difficult. But overall, we recorded in the U.S. market a 10% decline in sales. So it is clearly our toughest market to operate right now.
Okay. Mark, good morning. Do you think you're still too reliant on outlets in the United States? Is there a structural issue here? And given what you've said about the U.S., why are you still confident you'll meet your targets?
Well, I think there is an integral part of doing business in fashion to be visible and present in high-class outlet operations. It's part of the norm, and clearly it takes a higher share of the overall apparel business than, for example, in Asia and Europe. But what we have achieved over the last 2 years with our new strategy, that we are growing stronger in full-price business than outlets. So we see a gradual shift in our business, also in the U.S., to sell more at full price in our controlled online business and outlets. So I think the issue is not an over-dependency on factory outlets. I think Hugo Boss has a healthy relationship also in the U.S. It's rather the difficulties in physical retail versus online, and the overall more cautious spending behavior in our category, where other categories, for example, leisure entertainment, is benefiting to a stronger degree. We knew that the first quarter, just on the outlook, we confirmed. So, please go ahead, Matt.
Well, I wanted to ask about China, Mark. How important is that market to you in terms of the breakdown? Can you compare it to the U.S. for us, and how do you see the economy doing in China? Because a lot of CEOs are telling us they're now seeing a pickup, or at least expecting one in the second half.
Yeah, we knew that at the beginning there was some nervousness about the Chinese economy, consumer confidence and demand. We have seen a very solid quarter, especially in mainland China, where we recorded double-digit like-for-like growth. The overall number for the region is a bit muted to some temporary fact that due to store renovation closures from Hong Kong, Macau. But I'm very happy with the top-line momentum and particularly the profitability of this market for Hugo Boss. It's our single biggest regional opportunity. And that's also one of the reasons why I'm very confident that the strategy that we presented with our Capital Markets Day in November, it's on track, it's delivering results, even in difficult market environments.
And so given what you've said there about the US, Mark, and then on to China, do give us your thoughts on why you still think you'll meet your targets, given that US weakness.
Well, we see that all of our top-line growth initiatives are delivering on plan. We have recorded another very strong quarter on online. We see a return to growth with double-digit growth rates with Hugo, where we announced yesterday a very important global brand ambassador. We see good improvement despite this slowdown in the U.S. with sales productivity improvements, our single most important lever driving profitability. And the factors which have slowed down our profit development in the third quarter were all temporary. So we will explain in more detail why we see also normalization in our fixed cost development, that we are able to deliver high single-digit growth rates in terms of EBIT for the full year. So for the remainder of the year, we are forecasting a double-digit EBIT improvement, and we are very confident to deliver on this target.
You, first of all, you're a global brand ambassador for Hugo, I believe is a member of the One Direction brand. So we've all read about that this morning, and that's very exciting. I wonder, though, if you have a problem with, I think of Hugo Boss as menswear only, but of course you do make products for women. Are you having as much success there?
Well, there was a major milestone for me when we were at the New York Fashion Show just less than half a year ago. We presented for the first time menswear and womenswear into one show. And we see in these stores where we operate now menswear and womenswear together, for example, in Regent Street in London, Champs-Élysées, that womenswear has a very important contribution to the profitability of these stores. The numbers are still a bit muted because part of our restructuring that we initiated over the last 2 years, we have cut back to some overexposure in our own retail environment. And in the current tough environment, we can allocate budget and spaces purely on productivity contribution. And this has slowed down the growth in womenswear over the last 2 years. I'm confident that womenswear, Boss Womenswear, will contribute to that, but we also have to recognize that there was some overexposure to womenswear in terms of our sales and retail footprint, which we had to correct in the interest of driving structural profitability for the group.
Mark, we talked last time about some of the activities and the innovation you're doing around a more sustainable product. I wonder very quickly, could you give us your thoughts on what kind of pressure you're under from a climate perspective to move more towards rental of clothing rather than purchase? Is this something that comes in the decades that we see ahead for Hugo Boss?
We see a very strong demand for more personalized services, and also this services also includes some rental products. And clearly with tuxedos and others, there is an interesting opportunity, and we will follow this business model very closely. Right now, our focus is in this area, rather more sustainable products. So we launched a sustainable cotton collection this spring. We have an evergreen article with the sustainable sneakers. And we are adding new personalization options to our business. But we will watch the rent subsegment of this market very carefully.